Hi there, welcome back to Dukascopy TV. I'm Ben Jones. On the line with me today to take a look at the Italian economy is Maxime Alimi from AXA Investment Managers. So to begin with, Maxime, Italy had its inflation rate released yesterday. The figure went down quite significantly to minus 0.6%. Why do you think this is, and was a drop expected?
I think it was broadly expected. Some people may have expected a slightly smaller decline, but overall, I think it was no surprise given the very large correction that we've seen over the past couple of months in commodity prices. So most of the decline was actually driven by energy components. I think the new interesting development is that we're starting to see food prices declining again after a couple of months of stabilization. So we think the momentum downward could continue for some time. We're actually expecting the bottom of inflation in Italy and the euro area probably around mid-year only.
Now, in terms of growth, Italy hasn't seen positive GDP growth since 2011. When do you think this will change?
Yes, that's true, actually. The economic performance of Italy has been quite disappointing over the past year. We were expecting some recovery to take place in 2014. It was not the case. The economy was stuck in recession for most of that year. I think we're going to have very soon the GDP numbers for the fourth quarter of 2014. We're expecting 0% growth there. But I think we're going to have to wait until the first quarter of this year to see positive growth. We're actually seeing some pretty positive signs from the economy, again, because of the boost from both the lower euro and the lower oil price. So I think both production, so the manufacturing sector, but also consumers will benefit from that, and we should see some moderate positive growth in the first quarter.
And finally, how do you think the ECB QE will affect the Italian economy?
The impact of QE is very uncertain, and most likely it's a limited one. But I think Italy is probably one of the economies which has most to benefit from ECB's QE, given that this is really where the credit crunch is still probably the most severe across the large European economies. So I think QE will help really soothe the credit channel, both helping the banking sector and also helping funding conditions for the private non-financial sector. So I would expect, for example, interest rates charged by banks to come down as a result of this. But also I would expect credit demand to pick up a little bit as, again, it becomes more attractive for companies, but also households to take new debt.
Maxime, once again, thank you for joining me. That's all we have time for now. Do make sure you keep clicking back to Dukascopy TV. Goodbye.